this video, I'm reviewing what to know before you file 2023 taxes. Today's vlog is being brought to you by 401k Maneuver. 401k Maneuver provides online professional account management with the goal of supercharging your 401k account performance. So stop leaving money on the table each and every year in the form of lost returns. That's real money, you guys. Let us help you. If you're new here, be sure to hit the subscribe button, and the links to everything that we mention in this video you can find in the description box below. So let's jump right in. With tax season right around the corner, it's time to talk about what you need to know before you file 2023 taxes. According to the IRS, although the IRS will not officially begin accepting and processing tax returns until January 29th, people do not need to wait until then to work on their taxes if they're using software companies or tax professionals. You heard it straight from the source. Don't wait. Get ready to file your 2023 taxes right now before the April 15th, 2024 deadline. Before you file your 2023 taxes, you need to be aware of some significant changes that affect everything from which tax bracket you are in to which tax breaks you qualify for. So here's 7 key changes to keep in mind as you prepare to file 2023 taxes. Number 1, income tax brackets have changed. For 2023, there are still 7 different federal income tax rates, but the income ranges shifted significantly to account for inflation. In fact, there was about a 7% increase in brackets. Check the description box below to find your tax bracket today. Number 2, increased standard deduction. There is also a bigger standard deduction for 2023, and the good news is that this reduces your taxable income. According to the IRS, the standard deduction for taxpayers who do not itemize deductions on Form 1040, Schedule A, has increased. The standard deduction amounts for 2023 are $27,700 for married filing jointly or qualifying surviving spouses, $20,800 for head of household, $13,850 for single or married filing separately. Third, increased estate tax deduction. For 2023 taxes, the estate and gift tax exemption has increased to $12,920,000. Now note, this higher exemption will expire at the end of 2025. Additionally, the annual gift tax exclusion, the ability to give money to loved ones without tax liability or subtraction from your lifetime estate tax exemption, it actually rose $1,000 to $17,000 total. Number 4, Form 1099-K rule changes again. The IRS has decided to again delay the change that would require payments over $600 from third-party payment systems to complete Form 1099-K. According to the IRS, following feedback from taxpayers, tax professionals, and payment processors, and to reduce taxpayer confusion, the IRS delayed the new $600 Form 1099-K reporting threshold for third-party settlement organizations for calendar year 2023. As the IRS continues to work to implement the new law, the agency will treat 2023 as an additional transitional year. So for the 2023 tax year, previous reporting thresholds are still in place. Payment apps and online marketplaces will only be required to send out Form 1099-K if you receive over $20,000 and have more than 200 transactions. Now be sure to note this. You are still taxed on the income, no matter if it's a sale of goods or a side hustle. The difference here comes down to the type of form. Number 5, child tax credits. Child tax credits help reduce how much of your income is subject to tax. For 2023, the child tax credit is $2,000 per child under 17 years of age. And due to inflation, the refundable portion of the child tax credit has risen to $1,600 from $1,500. And according to the IRS, you qualify for the full amount of the 2023 child tax credit for each qualifying child if you meet all eligibility factors and your annual income is not more than $200,000 or $400,000 if you're filing a joint tax return. Now, parents and guardians with higher incomes may be eligible to claim a partial credit. Also, the IRS cannot issue refunds for people claiming the EITC or Additional Child Tax Credit, ACTC, before mid-February. Number 6, energy tax credits. Did you make an energy conscious purchase in 2023? If so, you may qualify for the energy tax credits. And if you purchased a clean vehicle or electric vehicle, you may qualify for credits up to $7,500. And according to the IRS, to claim either credit, taxpayers will need to provide the vehicle's VIN number and file Form 8936, which is Qualified Plug-in Electric Drive Motor Vehicle Credit, with their tax return. Additionally, if you made energy improvements to your home, you may qualify for energy tax credits. And I quote, "The Inflation Reduction Act of 2022 expanded the credit amounts and types of qualifying expenses. To claim the credit, taxpayers need to file Form 5695, which is the Residential Energy Credits Part 2, with their tax return." 7, there's still time to contribute to your IRA. You may have until tax day for 2023, which is April 15th of 2024, to max out contributions for IRAs and Roth IRAs. That means there's still time to boost your retirement savings. And IRA contributors are able to invest up to $6,500 with a catch-up contribution limit of $7,500 for those ages 50 and older for the 2023 tax year. Special note, for the 2024 tax year, the contribution limit allows you to invest up to $7,000 with the catch-up contribution limit for those 50 and older set at $8,000. Be sure to check the description box below for a complimentary read, Retirement Plan Contribution Limits for 2024. As you file 2023 taxes, we hope it is not stressful. Use insights from this year's tax season to prepare for 2024. And if you have questions or concerns about your 401k performance, go to the description box below and click for a complimentary 15-minute 401k strategy session with one of our advisors today.